Hey everyone, welcome to Financial Revelations. I am your host, David Szafranski. And I know I got some emails and texts last week because we didn't produce a show because Corey was out of the office last week. So here we are this week. And we do have a lot to talk about. I want to go over, you can call here if you want somebody to look at a portfolio or evaluate what you're doing. We don't have account minimums. I probably should have account minimums, but I don't. I've always felt like if people needed somebody to talk to and they didn't know who to go to, we could help them out. You don't have to move your money here. If you just want to start a Roth IRA and are looking for some ideas, we could take a little information from you so we make sure we're giving you good investment advice. And then you could take that to a Fidelity or Vanguard. I got to be honest with you. I don't love Vanguard. I just don't. They're basically socialists at the top of the firm, and they don't let you vote your shares, and they vote your shares in a way that you might not want to vote your shares. Now, Fidelity does that in certain ways too, but I like their funds better at Fidelity. I think if you're going to use ETFs or you're going to use funds, if you said, well, who's got the most that you love? Fidelity is one of those companies. Vanguard has a few that I really like. Of course, they're good at it. I just don't like their philosophy. But we could help you with those things. We could evaluate a portfolio. We don't need to manage every dollar we look at. I am in the enviable position where I've been around long enough to where we have a lot of money under management, and if we could help somebody, well, we'd want to do that. You can call here, you can email us, we can send out a fact finder to you, we could do all those things. We're also going to the Amazon in March, and you can donate to that if you want. You can't go because the trip is booked. The next trip that's happening in May that I'm not on, also booked, so they're taking no more people on that trip. But you could be part of it. We're building a church there in Mauez, the city that our church is at. They're going to build their permanent building. They just started the foundation there. It's going to be really nice, especially for that area. So if you wanted to contribute, I could promise you that 99% of the money that you give is going to that mission. We don't take a salary. Basically, we raise money to pay for things like the 501c3 establishment. We have an accountant that donates her time to do our accounting filings and all that stuff. So we're trying to do it so that as much money as possible goes to the mission, because that's why nobody's doing it to make money. It's not like remember William Aramone from United Way, who was flying around on private jets to help get donations. Well, we don't do that. We fly commercial. I've never flown private. Probably those are the planes that crash, so I don't want to. You don't really see a lot of big planes crashing unless it's a DEI crew, and then they do crash. So, don't fly a DEI crew if you can help it. And so you could donate to that. Just you can go to nativosusa.org and make a donation, or you could you could call here. We could tell you how to do it if you just want to send a check. Very easy to do. We're not taking a well this time. We're building things, and we're taking a dentist and a surgeon who's going to evaluate a couple of kids with cleft palates, and they're going to do that surgery for free. So they're going to fix them. I've seen it done before. I've seen before and after pictures. I don't know if you've ever seen somebody with a cleft palate, but it's dramatic. And usually those people suffer from infections because their skull is basically open, and that needs to be fixed. And it's I wouldn't say that there's no simple surgery, but it's not the most complicated surgery. And it turns out it's fairly easy to fix. And so there's going to be a couple kids that are going to get their cleft palates fixed. And those are the kind of things that we do. We deliver the gospel too. We're going to work with the kids and the people of the village. It's not uncommon to see us dunking and baptizing people in a tributary of the Amazon by the dozens. We're taking a reporter from the Wall Street Journal with us. They're going to do a story on us. we're excited for all this. We love to go. We love the people there. We love the mission there. The missionaries that we have there. It's a struggle, I'll be honest with you. Mauez, the city of Mauez, there's not a lot to do there. We'll rent a motorcycle if we have time and drive around, and you drive around the whole city in like 15 minutes. And it's an island, essentially, because it's on three sides there's river, and on the other side there's a very, very deep, dense canopy that you probably don't want to walk in. It's dangerous. So it's essentially an island most of the year with water. And then when it's not an island, it's a place that you probably don't want to be out in dark, so in the jungle. So you could be part of that. Now, economically, a lot of things are going on because it was a really bad week last week. You see this from time to time where a very popular trade that's making a lot of money, which would be chips, the Lam researches, the Mag 7, Apple, Amazon, Meta, companies like that, all of a sudden they're trading off. You're like, wait a minute, I love this trade. And it's essentially the AI trade. NVIDIA was trading off, and Micron didn't trade off because they do a lot of mobile chipsets for phones and mobile devices. So they're skyrocketing today again. But a lot of that AI trade was coming off. And so if you watch enough financial press, and I have a TV behind me, I don't know if you could see it or not, but essentially I split screen a couple of financial channels, and I go back and forth if they're talking about something that I'd really like to hear about. And really, they're starting to say the things that are very common in times like this. Well, we're transitioning out of the AI trade. We're transitioning out of the chipsets. And I have to tell you, it is quite possibly one of the dumbest things I've heard said in a long time. We have not even begun the AI trade yet or the chipset trade yet. And when you think about chips, if you remember in the pandemic, we could not get chips, like microchips, microprocessors. And you'd say, well, how many could you need? Well, I have a Ford F-150. And in the brake lights, there's 4 microprocessors in the brake lights. The harder you press, the brighter the lights become. And so you think, okay, F-150, number one selling car in America, 4 chips in the brake lights times however many they sell. We're just starting. We're nowhere near the beginning of this thing. And like if it was a baseball analogy, I'd like to say, well, we're in the 7th inning of this trade, and I would say we're not even in the car yet to go to batting practice. This is going to go on for a long time, and I know people are afraid of a circular trade where NVIDIA is selling to another company and then NVIDIA is buying from them, and the money's just going around in a circle. People are clamoring for these chips, clamoring for them. They can't get them. There's not enough capacity. They can't build them fast enough. I don't know how many ways I could say this, but there is a strong demand and not enough supply. And Taiwan Semiconductor and other companies are going to build chip plants here, but these things take a long time to build. This is not like, well, we're just going to pop up a chip factory. No, these are intense. NVIDIA has a machine, an ozone machine. They have 4 of them or 5 of them in the world. They make them. They're the only ones who have them. And it's a vacuum ozone machine. And they cost like $600 million to make. And there's only 5 of them. And NVIDIA has them. That's why they can build the thinnest, fastest, most heat dissipating chips because of this technology that they have. I'm telling you right now, there is not enough of whatever they want. There's not enough. And that leads to rising prices and better profit margins. Now, eventually, there's going to be an equilibrium, but it's not going to be for 5 years. And even when there's an equilibrium, you think, well, okay, every couple of years, it seems like we advance or double our information and our need. Elon Musk is talking about putting data centers in space. We're at the beginning. We're not transitioning out of this trade yet. So when things like last week happen, and I every once in a while I get some people that call me and they're in a tizzy. My answer is the same to everybody. Buy more. If you have more money, let's buy more of the best companies that are getting beat up the worst. You buy the chaos. You don't sell the chaos. This is why I hate stops. Now, if you want to buy an option, I'm all for that, okay? Because you have a guarantee there. But with a stop, you don't. You can get, if the market opens up down 20%, you're getting stopped out. And you know what happens when the market opens up or down 20%? It closes down 3 or 2 or 1 or up. And so you sell out at the worst possible times. They're just uncontrollable. Now, you could do trailing stops where as your stock goes up, the stop price follows you. But the same thing could happen if the market opens up. Like if there's an exogenous event in Iran, which is probably going to happen. We just moved a second carrier group to Iran. Now, it may be a bargaining chip, but it may be that we're going to bomb Iran. And the last time we negotiated with Iran, in the middle of negotiations, we bombed their nuclear sites, took them out, decimated them. The bunker buster bombs, remember? The Moab, the mother of all bombs. When we used to do Christmas cookies, we would do a SMOAB, which is the smallest of all Buckeyes. It was like, Buckeye cookies. It was like the head of a pin and had chocolate on it. And then we would also do a Moab where it'd be like a Buckeye this big. I love Buckeyes. I love cookies. I love sugar. That's why I can't eat it. I just had blood work done. I'm sorry to say, I'm not going to die. But I do have high cholesterol, which kind of makes me mad. But it's not so high, but I'm going to work on it. I promise. So don't get freaked out by these swings. Don't sell out because of these swings. If you own good stocks, they figure out a way. My good friend, who's now deceased, Chuck Fulgraf, it's the only reason I can share his name. He was very like the number 3 guy at Procter & Gamble. We managed some of his money, but he had a lot more Procter & Gamble stock. And we were crushing Procter & Gamble rate of return wise. And I had him. I knew I had him. And I met with them, and I said, Chuck, you should move all your money over to me because I'm killing Procter & Gamble. And he just laughed. He said, David, all great companies go through rough times. The difference between a great company and a not great company is the great company figures out a way. And that's what they did. They figured out a way. And then the next thing you know, they're outperforming me. So Chuck was one of the smarter people I ever knew. Everything he touched turned to gold. Literally, he was so smart, he died in a year with no estate tax. So not only did his family get all of his money, but they got the insurance that we planned for, that we bought, and it was a lot. They got that insurance money tax-free to pay the estate taxes, which now didn't exist. So it was like a double whammy to the upside, although they did lose their dad. But Chuck had lived a full life. He was ready when he died. So yeah, like everybody, we're all going to assume room temperature. You got to plan for these things. So don't get freaked out. I have a letter coming out tomorrow for our clients, and we'll be talking about some of these things and going into a little bit more detail. And if you're a client, you get that letter. If you're not a client, well, you don't get that letter. You get this. You get the podcast, which is, if I may say, it's full of a lot of information. And I was just with somebody last night, and they said, well, what is your investment style? And this was an easy question to answer because it's growth oriented. We want to grow. I don't want to put your money in bonds. I don't want to do. We used to do this. There was a portfolio management technique when I first started in business, and it basically called for like a 60-40, 70-30, 50-50 split depending on age, and it was garbage. It was total garbage, and I moved away from that before most people did because I was watching the rates of return, and I thought, man, I am giving away so much money for people because we're trying to not lose money. And when you manage your money to not lose money, now I know this sounds strange. Of course you don't want to lose money. I have yet to meet the person that says, hey, it's okay if you lose this. Nobody says that. Nobody wants to lose money. But if your goal in managing money is not to lose, it virtually guarantees that you will not make a lot of money. And so if possible, if it's within your realm of possibilities, be growth oriented. The market is up 80% of the time. Now, when it falls, it can fall heavy like it did last week. If you keep a little cash on the side for opportunities like that, you buy. And then if you want to, let those stocks come back up and then take a little bit of money off the table, well, you never go broke taking a profit. You pay a little tax, but you never go broke. I don't mind those things. I think that's a good way to manage money. So that's how I want you to think. I don't want you to think, well, I want to manage it so I don't lose. I want to manage so I make money. And we have been doing this. I have been managing money this way since about 1997, 1998. And it has been very profitable for us. Now, there have been times, there's times like 2008, 2000, there was the great technology bust, but I didn't own those companies that didn't have profits. So there was a lot of companies that were coming out, the dot-com bust. We just didn't own those companies. The companies that we own make money, and a lot of it, and their prices will reflect that over time. So manage money to grow. Don't manage not to lose. If you manage money to grow, I feel pretty confident, not a guarantee, but I feel pretty confident that over time you'll make money and more of it. Now, it doesn't mean you need to be crazy growth or silly growth where you're taking uncalculated risks. I'm not betting the farm on things. I'm not putting all my money in one thing. I'm not even putting the majority of my money in one thing. We're spreading it out to different things because there's risk in industry, there's risk in market sector, there's risk in geography where you're investing, there's individual company risk, there's interest rate risk, there's all these things are happening. Some of these growthier companies tend to be loaned out or leveraged a little bit higher, so when interest rates go up, their profits go down. You don't have to do all your money in those things. So don't put all your eggs in one basket. That's in Ecclesiastes. Don't divide your portions into 7 or 8 because you do not know what disaster will befall you next. So you divide your money up. It's actually biblical not to put all your eggs in one basket. So I want you to pay attention to these things. I want you to watch the market. I want you to be engaged. I want you to ask your advisor questions. If you're with us, we love questions. We love contact. Now, I'm going to put this out here, and we're going to send everybody that emails in a shirt, and it's a surprise shirt. Corey doesn't like this shirt, but I have a bunch of them, and I want to get rid of them. So if you email Corey and say, I want the surprise, you're going to get a surprise shirt. And maybe I'll throw in a button too. You can go to the website, sinofretirement.com. You can get a book. You can get a hat. You can get shirts. You can get buttons. You can get refrigerator magnets. The best thing that you could do, I think, for kids is educate them on money, but make it fun. If you were to sit down with them and say, okay, we're going to develop a budget for you right now, they're going to be like, Mom, but if you put a refrigerator magnet on that says, I love stepped up basis, they'll say, what's stepped up basis? And then you might have a conversation about it. You may not know what stepped up basis is. I'd love to explain that to you. In fact, next podcast, I'm going to talk about why stepped up basis isn't so important and how you get stepped up basis and where you get stepped up basis. We'll talk about those things and we'll implement a strategy for stepped up basis for you that is really powerful. It's going to allow you to pass more money on to your kids or to whoever you're passing your money on to if you understand the concepts of stepped up basis. So I am David Szafranski, a real American, a true red-blooded patriot, and the voice you can trust.